Sawadika. Good morning, ladies and gentlemen, and thank you for being here today. We are Team 5, and now it's time to turn your attention to the prosperous future of convenient food store. Let's start with a quick overview of CPO. CPO is the flagship company of the CP Group's marketing and distribution business. Their main business is operating convenience store under the brand name 7-Eleven, a registered trademark of 7-Eleven Inc. in the US. In fact, CPO is the holding company, meaning that in addition to convenience store business, they also operate other related business to support the main business. As shown in the slide, CPO acquires more than 50% of market share, and this has led CPO to become the leading convenience stores in Thailand, which covers 77 provinces nationwide with a total of approximately 6,000 stores as at the end of December 2010. Products offered in the 7-Eleven stores can be divided into two groups, which are food and non-food products. Food products represent 70% of total products, while the rest belong to non-food. After the quick overview of CPO, we come to the buy recommendation at 59.54 baht at 16% upside gain.
Well, why buy recommendation? Well, there are four main reasons for you to buy CPO stock. Right move towards the convenient food store business, high growth rate for the store openings, strong cash flow and potential opportunity in China. For the right move towards a convenient food store business, Thais spend high portions of their expenditures on food and beverages since they find it easier to purchase food instead of making it. CPO is moving towards the right direction. With this direction, CPO has a gross profit margin increasing year by year. As far as competition is concerned, CPO positioned themselves as a convenient food store to differentiate themselves from their competitors. For the second point, CPO has a goal to open 7,000 stores by 2013, and they could achieve this in two reasons. Thailand is still far behind from Taiwan and Japan in terms of penetration rate. Two, there is still room for future expansion in the province areas in Thailand. As CPO focuses on 65% on franchise opportunities, this will lead to a decrease in capex to sales. For the third main point, strong cash flow with a high inventory turnover rate and the business, CPO realize a negative cash sale days, and this will lead to availability of working capital. For the fourth main point, potential opportunity in China, CPO with a high growth rate and a high economic growth rate in Nanjing, China, we believe that there's a business opportunity for CPO. However, our valuation does not include risk reward in China. Now for the financial analyses. 91% of CPO's revenue comes from the convenient food store business, while the other revenues come from other related businesses such as bill payment collection services or manufacture and sale of frozen food. We estimate that 16% compounded growth annual rate will be from 2011 to 2014. However, this strong sales growth is due to store expansion and same-store sales. For the gross profit margin, it improved because of change in product sales mix. Selling and administrative expenses to total revenue decreased from economies of scale for logistics, R&D, and advertising. When analyzing the statement of cash flows, operating cash flow increased gross profit margin from increasing gross sales from increasing gross profit margins to decreasing selling and administrative expenses to total revenue. Increasing cash flows is from store expansion, store renovation, and investment DC and IT. Financing cash flow is from dividend payment. Since the company has no debt, CPO can pay dividends to their shareholders. And for the balance sheet, ROE improved with 16% in 2007 to 42% in 2014 forecasted. However, our debt does not include in our target capital structure.
Now, let's come to our valuation part. We evaluate CPO by applying two techniques, discounted cash flow and the multiple analysis. Before estimating sales growth, we adjusted sales and services income by minus sales and services income from Lotus Trademark Indian Seeking District, China, which was divested in year 2008. Sales growth of 2011-2014 is 16%. forecasted EBIT will reach 16.5 billion baht in year 2014. We believe that the inflationary pressure will be passed to consumers so that margins will not be deteriorated. Moreover, CPO effective tax rate is less than the statutory tax rate because of the tax benefit from Siksa Pivat Company Limited. Our discounted cash flow is based on three-stage approach. After the analytical period, we assume 20.03% for constant period until 2020. After declining to 4.6% in year 2026, we obtain the target price of 59.54 baht. Moreover, we adopt the multiple analysis to confirm our target price. As it's hard to identify companies' direct competitors in said market, we then compare our analysis based on two categories of companies' peers. First, the retail stock listed in the commerce sector in set. Second, the Asian retail stock. From PE versus EPS metrics, it draws to the conclusion that CPO has higher growth than peers. As a result, CPO deserves to be traded at premium upside from the current stock price. We believe that PE has limitation of the growth. Therefore, PEGs give a clearer picture of company's growth. After we calculate the median PEG together with CPO's growth estimation, we come up with a target price of 55.36 baht under Asian retail stocks and 58.58 baht under said peers. We also adopt the EV per EBITDA multiple to confirm our buy recommendation. After taking EV per EBITDA growth into account, we come up with a price of 58.96 baht. In the end, we base our target price on FCFF model with a target price of 59.54 baht. We do not consider using the multiple analysis due to its limitations of peers. From the sensitivity analysis, after we perform the sensitivity analysis, the prices range from 45.17 to 82.86 baht. Company's strong profit growth is growing continuously, supported by high multiple and outperformance in the stock market.
Let's talk about the investment risk. As you can see in this metric, we rank the risk based on likelihood and impact, and we will focus on the risks with a high impact. Retail and Wholesale Act. If this act is passed, CPO would be affected because this would force the large retail store to open up smaller outlets, and this could cause the intense competition. However, CPO is still dominant in the market due to its strength, and it is difficult for their competitor to steal CPO's market share. Flooding crisis is another impact which will disrupt CPO's supply chain. To combat with this problem, CPO plans to expand the business in year 2012 with a new store concept for preventing future flood, and also build a DC in Eastern Bangkok in order to increase the efficiency of logistic management. Finally, we draw to the conclusion that CPO has a solid foundation in terms of operation, financial performance, and long prospect convenient food store. That's why we recommend you to buy CPO stock.